Nigeria's economy issue is a peculiar one. After the storm of recession and the subsequent exit, the struggle has been to ensure stability of the currency and stimulate growth. The economy has been growing at 1.8% on the average yearly. For 2019, while IMF projected a growth rate of 2.2% and the World Bank at 2.4%, the Central Bank of Nigeria says it is expecting to grow at between 2.7 and 3%. This may not be far-fetched as the foreign reserve is getting robust and now stands at over $44 billion. The Monetary Policy Committee of the Central Bank of Nigeria said it has to come out of its comfort zone to take policies that can create jobs and stimulate growth. A first step has been taken, which is a review of the monetary policy rate, also called interest rate. The Apex Bank governor is here to announce the committee's decision at the end of its meeting.
Two members, however, voted to hold MPR at its current level. 10 members voted to hold all other parameters constant, while a member voted to reduce the cash reserve ratio by 100 basis points from 22.5 to 21.5. In summary, the MPC voted to 1. Adjust the MPR by 50 basis points from 14 to 13.5%. 2. Retain the asymmetric corridor of plus 200 and minus 500 basis points around the MPR. 3. Retain the CRR at 22.5%, and 4. Retain the liquidity ratio at 30%.
The CBN Governor Godwin Emefiele is asking the fiscal counterparts to strengthen revenue collection, generate more power, and sanction saboteurs of the economy.
And with the relative stability we've seen in the macroeconomic variables over the last 2 to 2.5 years, we just think that should be the next phase where we should begin to be talking about consolidating growth. That this should be the next phase where we should stop talking about how do we create more jobs and reduce the level of unemployment in our country for people. We believe this should be the next phase where we should be talking about how do we diversify the base of the Nigerian economy. And that in doing this, we will continue to keep our eye on the stability that we have achieved so far in the macroeconomic environment.
It is hoped that the reduction in interest rate will reflect across board, as commercial banks are always quick to implement increase, but very slow when there is a reduction. Gabriel, Kuma, ITV News, Abuja.